Recording this video, it's actually Monday morning, 8th of August 2011. Chicago time though, it's 6:40 p.m. Sunday night on the 7th of August. Futures markets just opened down 30 points with the news that S&P's downgraded the US bonds. And absolutely historic week this last week. We had 21.3 million contracts traded. And we're in the middle of history being made. This whole global financial crisis, and with the end of a 40-50 year kind of bond market, US bond market, having them kind of downgraded by S&P. I mean, this is historic times, historic moves. Feel kind of privileged to be in the middle of kind of history being made. Certainly scary week with all the volatility and activity last week, and it's been good just to settle back. I've been agonizing a little bit over what charts to show and what to say and so on. I suppose there's a couple of things. Kind of first of all, I think there's a lot of hysteria going on in the news, particularly about the S&P downgrade. But there is a lot of hysteria kind of going on, and a lot of people trying to create panic almost with kind of news stuff. I think this week what we're going to do is try and find a bottom, then to kind of rally back. And I think with extreme kind of volume like this, I mean, this is towards the end of the week, the professionals were definitely kind of picking up and saying, we're going to get a snapback rally, and this is a good point to kind of jump in and buy those levels. In terms of where I think we're going, I think this week plays out for me a little bit like this. Monday, I think we'll try and find a bottom. Tuesday, we'll have a snapback rally into or around the 40s, the kind of 1240s type level, and then head back down. That'll be kind of a pullback and a downtrend level, testing on Thursday with another kind of bottom, and then Friday kind of starting the rally. So that kind of timing is what I'm looking for this week, kind of volatility at the lows and trying to, with some kind of violent kind of snapbacks and contesting moves, but trying to find a bottom at the moment, kind of heading back. And I'll try and explain why I think that's the case. First of all, just on this volume, so 21.3 million contracts traded this week. I mean, we've not seen that kind of volume of activity since the lows in 2008. And when you look at this thing on a long kind of time frame in terms of the E-mini, I mean, we've been growing in popularity in terms of the trading on the E-mini, but just extraordinary in terms of the volume that we just had this last week. Sine wave charts. This is kind of why I'm saying we're trying to find a bottom here. So I've been talking about we're looking for this cyclical support on the daily time frame that's due to come in, and the way we find that is by looking for an end of trend sequence on the lower time frame that's equivalent to this kind of higher time frame, and that time frame is a 45-minute chart. TradeStation just chose to refresh all of my charts just then, so a little bit of gap in the video. Anyway, so talking about this cyclical low we're trying to find on the daily chart, and the way to find that is to look at the lower time frame chart. So you go to the 45-minute chart. I'm looking for a pullback to end of trend sequence here. So we've still not seen that pullback to end of trend. What I'm suggesting is if we go to a time frame like the 40,500 tip bar chart, we're starting to see a bottom being formed on Friday's activity. Thursday we had an end of trend warning kind of come in here, but you can see around that end of trend warning, no blue professional bars, and the flush signals kind of came after that. So, but with Friday's activity, a little bit more kind of bottoming in place here. We've had our sell-off, exhaustion selling, we've had our flush signals, we've had the blue professional bars kind of come in on the lows on Thursday, and on Friday's kind of testing the lows at the end of the day, we had them kind of coming in again. So we got a pullback to end of trend sequence here, and this exhaustion kind of buying here right at the beginning was just almost like a bit of a short covering rally, or kind of rush for the doors kind of down here. So and this is the gap open, this 30-point kind of gap open that we've just had on the Sunday evening in Chicago. So that's kind of looking like that this might be the end of this downtrend on the 45-minute chart, and then we'll be heading back to some kind of pullback level when these kind of cross, and then heading back to an end of trend on the 45-minute chart. So that's why I'm saying Monday we find a bottom, a snapback rally on Tuesday into some kind of resistance point here, test back down for an end of trend on the 45-minute chart, and then looking for where this might go. if we look at the better X trend at the moment, that is sitting in terms of a this trailing stop on the way down is sitting at the 1241 level. So that's kind of the region where I'd expect some kind of snapback rally to take place and then kind of test back down kind of below 1200 or around kind of 1200 here. So that's what I'm seeing for this kind of next few days, that kind of pattern kind of going on. If you look at the hypothesis chart, we've kind of well past the kind of the low that I kind of foresaw in this kind of scenario kind of going forward, and this bottoming process is obviously going to take a while. I mean, on the hypothesis chart we're just showing kind of straight lines backwards and forwards, but I think this bottoming process is going to develop over the course of a week or so. In terms of where this is going, I was trying to look at some kind of comparable type activity, and okay, so overall I'm kind of bearish, and I think this is, we've been spending basically 2011, we've been basically kind of topping out. So let me just show you, this is E-mini on a weekly chart here. This is beginning of 2011 here, and we've really, this is the Bin Laden high that we've kind of been working around, and this is kind of this week's sell-off here. So all I've got here is better sine wave on these charts and the professional and amateur bars kind of here. So we've had this kind of massive kind of decline. Interesting that we're coming into this kind of level previously, which is a breakout level, and remember kind of these type levels kind of do tend, after they become resistance, they turn to support. So that kind of area is a an interesting kind of support level possibly coming back. But if I was to go back, just looking at the the kind of global GFC1, everybody is starting to call this GFC2, kind of on the news, global financial crisis 2. That's kind of the moniker that it's going by under Australia at the moment. 2007 into 2008, we had this beautiful little kind of pattern here, the pullback into end of trend, marking the high of the market at 2008, and then the decline. This was the first leg of the decline that we got, and this is kind of what I'm saying is kind of where we are comparably today. And from that initial decline, then we had a weak rally back, and then this was the point, mid-2008, where everybody kind of realized we're in real trouble, and then we kind of had this massive fall off during the second half of 2008. But mid-2007 the market was topping out in equities, and this is the place where I suppose I see the most comparability in terms of where we are right now in terms of the equities market. I think this was a very weak rally back to just the highs of those kind of extreme bars. So we're talking about a rally back to maybe 1300. Psychologically 1300 will be a very kind of important point, and it took, if this is a weekly chart, we're talking about a 3-month period over which this kind of rally kind of or this weak kind of retrace happened over that time. So and I think that's timing wise might be about right. September, October is usually kind of seasonally a bearish kind of turning point in the market. So we'll have to look at that as potential. Then let's look at this in terms of bond market. Now, if you saw the equities market in mid-2007 was topping out, if we look back to mid-2007, the bond market had already started to really rally strongly from those lows. The smart money is potentially in the bond market, and at that point there, we also had kind of extreme volumes and professional up bars on the bond market contract, but the bond market had been a strong rally for 6 months or so from those while those equities were kind of topping out. And we've seen the same position here for the last 6 months. We've had a strong rally in the bond markets. This is 30-year bonds with this kind of cyclical support on the weekly chart here, rallied forward, and then we've got this similar kind of extreme volume buying up bars, professional up bars, all of this week on the bond contracts, and all of them, the 30, the 10, the 5, similar to this. And I think from there, that's not a top being made in bonds. All I'm suggesting is that we'll have some kind of weak retrace kind of back here, maybe to the original breakout level, or where the professionals kind of were kind of starting to be active kind of here. So I can see us kind of going through this kind of consolidation period, and the news might be, we're seeing kind of downgrades in US bonds, and so the news feeds will explain this as being lack of confidence in US bonds. But then as soon as the market cracks for real, this is the rush that we had into out of equities, where equities really collapsed, and every kind of moved into into bonds for safeties. This is the safety play kind of here. So just seeing this as a little bit of an area of retrace for bonds and then kind of taking off again. And then if we look at it in terms of, for me, the interesting thing has been dollar index. Dollar index during this last week, I mean, we had total destruction in the equity market, but dollar index didn't move. Euro didn't move. I mean, the two things that moved up this week were Swiss franc went epileptic, and I think that's everybody moving the money out of Italian banks and Greek banks, and all the European banks worried about a run on the European banks and moving them to Swiss bank accounts, and so we've got a huge run on the Swiss franc. We also had one in the Singapore dollar, kind of here in Asia, and to some extent into gold, but the dollar index just did nothing this week, and interesting, you go back again to mid-2007 when the equities market was falling out or topping out. We still had the dollar index kind of starting to move down, and it wasn't until we had that second move down in the equities market here at this point, mid-2008, where all of a sudden the reality of this situation hit everybody, that the equities markets totally sold off. And it wasn't until mid-2008 that dollar index, nicely signaled here with an end of trend warning on the weekly chart, took off. So the money wasn't moving into the smart money was moving into bonds, but then the move into the US dollar and kind of the repatriation of funds back into the yen and the US dollar out of leveraged positions didn't happen until that kind of mid-2008 period. So I see us still being in this kind of consolidation zone here in dollar index, and I think I don't think the decline in dollar index is going to be that severe, but I think we're still going to see weakness at least in the dollar index over the next 6 months or so, which I hate to say because sitting here with the Aussie dollar down at 103 today, but it was up at $1.10, and I'll tell you what, at $1.10 it really hurts me personally, so I don't particularly want it to get back up there. But anyway, so that the dollar index has done nothing this week just suggests that we're in this kind of position here, that there's not been a panic move and a realization that we're going that a lot of kind of leveraged positions needs to be covered, repatriation of funds back into carry trade currencies like the US dollar and the yen. So we've not seen that yet, and so I still think we're maybe a ways away, or a few months away from that. So that's why I'm looking at these. So that's kind of the pattern where I think we are in terms of the equities markets, and we're in this phase of what we saw in the last kind of sell-off. That's my kind of hypothesis, at least. And then the reason for those bond markets, so the bond market's still going to continue up. If we look at the monthly chart in terms of all the interest rates, so looking at kind of 10, 30-year, 5-year and so on, we topped out in terms of interest rates a couple of months ago, and we're in this cyclical downswing in terms of rates. I mean, the rates are moving down. So this is the 30-year, this is the 10-year, and we're still a few months away from bottoming out in terms of rates, and there's the 5-year kind of still moving down. So that would suggest that rates will still kind of, they might kind of just, these are historic lows, so we might kind of find a little bit of support here, but they might continue to just edge lower, and the bond market, after some just digestion of the move that we've just had in bonds during this last week, a little bit digestion over the next few weeks or so, but continue in this kind of move upwards. For the bond market and all these markets to change direction, we need to see more divergence patterns, and that's just in the last series of charts. Let me just show you those. So this is crude oil. So this is this week's kind of sell-off from $100. We hit this resistance level, very weak buying, bearish divergence, Rambo pattern, and sold off here. Now extreme selling at this point, but these moves don't turn around until we see bullish divergence patterns. So we saw a little bit after this last waterfall move. Kind of digested this move over a series of weeks, and then a little bit of a rally. But these things don't turn around until we see those divergence patterns. So although the waterfall move I don't think we're done in terms of downside moves, but we'll slow down and will not start to reverse until we see those divergence patterns, and we can see all of that on all of these charts. This is Aussie dollar extreme moves this week. We're down at 103, kind of here Monday morning, but again, this isn't going to slow down and turn around until we see those divergence patterns. This is copper. Similar thing. We've not had an exhaustion kind of selling move go off, but this will happen in the next couple of days with the levels that we're down here. And again, just what we're seeing here. Here's gold. Gold's kind of the if anything, is actually kind of starting to show those patterns. So, we had exhaustion buying a few weeks ago, and we've had very weak buying kind of making these new highs. So potentially, gold is maybe starting to flip over. Silver, we had that move up to 50 back in April, and that's when we had the divergence patterns. It kind of rolled over. So again, at the moment, extremely weak buying. I would suggest that we're maybe actually in a downtrend on silver. So. And then lastly, looking at just the bonds again. So this is these kind of extreme moves in the bond market. Just up here, all these professional up bars, potentially kind of taking profits on this point. Kind of maybe getting back in a little bit later when we kind of sink back down. But that was pretty extreme move there. And this is this dollar index where we've gotten nowhere over the last few months. And when you look at these kind of professional bars, if anything, they're kind of profit taking bars. And so I still see a little bit of weakness in the dollar index. So anyway, hopefully that was helpful. So during this next week, what I'm going to be looking for is a bottom being made, some kind of snapback rally into this pullback and a downtrend on the 45-minute chart, and then a retesting of the lows to find that end of trend, and then gradually kind of building the case and the base for a little bit of a rally back up to new highs. And again, kind of going against the general kind of panicky feeling that everybody has. I think the professionals are using this opportunity just to be carefully kind of step back in the market and pick it up. But these bottoming processes take a while to develop, so that would be my kind of scenario. Is this just a slow bottoming process over the next week and a half, 2 weeks? Anyway, so looking forward to, again, hopefully a little bit quieter week this week, but I think we'll have some really big kind of moves, and particularly kind of trending moves in the lower time frames to take advantage of. So looking forward to that. Hope your trading is going well.